we look at the overall stock market, the discussion is the economy going to crash, or are we going to move up into the presidential election? If you look at what's happening with inflation, jobs, and everything in between, there's a lot of question marks. Now, typically on my main channel, I go over technicals, breaking down how I'm trading, but I want to make this a more of a simpler point of view and break down everything and how it's kind of happening, and then my overall interpretation of that. The first thing that we're going to do is quickly go over what's happening here on the week. As you can see, when we go over some of this report, you have your OPEC monthly report coming out again on this Tuesday. You had your meeting this past week, and then you also are going to have your core CPI, get another very large inflation poll coming in Wednesday. Then things get a little bit more interesting as you go into the end of Wednesday is when you have your interest rate decision and your FOMC meeting. Yes, CPI and FOMC on the same day. What could go wrong? Further on, you have your PPI coming out Thursday, the day after the FOMC meeting, and then you wrap it up with Michigan expectations on inflation. Again, things could get really interesting on the week. Now, we can look at the data that we've gotten over the past 2 months and get a better look. Now, if we go back and what's been happening based on CPI, PPI, and PCE data on the inflation side of things, you can see that those reports have kind of stalled. But if we look at this most recent month, I think you get a better viewpoint of maybe things are back on schedule. And that was a really big surprise. Now, where I equate a lot of this coming into is number one, what's happening with energy. So I always bring up this chart here on oil. And I think oil is one of the biggest things that will help us. And when we look at oil, you can see this is the daily or the weekly chart actually. You can see obviously when inflation was its biggest issue was when oil was ripping to all-time highs, in 2022. As oil started to drop back down going into September and October, that's when the market found a bottom of 2022. And then we had a pretty stable, drop on oil all the way into midsummer of 2023, right? And then you see a little bit of a surge. And again, we can equate this right back to the S&P 500 and how this tracks. And it's important that we are able to identify trends that are happening broad markets and what's helping. Now, of course, it makes sense that when oil and fuel gets cheaper, that supply costs go down. This helps inflation across the board, especially after the kind of, really turbulent year of 2022 that we had. Now you can see the one constant has been here. Even though oil will bounce in some of these cases, it's really not affecting the market like it did before because it's not that dramatic of an increase. But the one thing that is dramatic is when oil dips, it's affected the stock market very good. Why? That's gone straight back into these inflation reports, right? And so what I want to go into now is going into what the other side is. So we have inflation and then unemployment and employment in general, which is what the Fed continues to tell us is the most important data pool of all. They say this is the king. This is if these two align, if unemployment rises and inflation is back on track, we cut rates, right? Now, I'm not telling you that we're cutting rates this week or next month or the month after. Honestly, it's a lot of speculation at this point, and we just don't have that data yet. But as we jump into unemployment data here, I think it's important that we just zoom in and we just look at what's in front of us. And when you really look at this is going back, all the way to 1970, but we'll look more recently of big drops that we've had or big rises in unemployment. You can clearly see that unemployment is tracking to the upside. Yeah, you'll get a few months of where it drops a little bit, but overall it's up. And this month was really weird because if we go into this a little bit more, unemployment and non-farm payrolls came out at the same time. So let's go into the 2-year trend here so you can really see what's happening here and get a little bit of a zoom out. You can see clearly upticking over the past year. Now we go to non-farm payrolls, and this was the weirdest part. You look what's happening here, and again, you get non-farm payrolls, which are very high, meaning more people getting jobs. And then you go into unemployment, and it shows that more people are filing for unemployment, right? Do you see that the countermeasures of what's really taking effect here? And so the big article here and why the market ended up jumping off this news eventually was because, this was very misleading. It was very, very misleading because the truth is, if the job market was strong and it wasn't weakening, unemployment would be dropping. It would not be rising while this other metric is going up as well. So again, doesn't make any sense. So I side here with unemployment, but I will say that this is a little bit tricky and we need to see how the Fed goes over this. Okay. Now on this week specifically, I went over a lot. It's very important that as we go into this, the Fed speech and what's happening here on Wednesday, that we're very, very clear and we're unbiased to what they say during the statement and what Powell says during this as well. Now, my personal opinion is that Powell will continue to take a pretty strong stance on the market, that he likes what's happening. The jobs market is weakening. Inflation is moving in the right direction, even though the economy is so strong. I think that's what he's going to say. Now, again, I'm not trading biasly based on this. I'm just from the outside looking in, because as we come to these days, I typically don't trade during these big FOMC meetings. Maybe after I'll take a trade, but it just doesn't make any sense to open myself up to that risk when we still have another 300 days of trading throughout the market. You see the issue there? And most people just want to like FOMO in. Now, where things get more interesting too is we look at what's happening with oil. And I don't think Jerome Powell is going to mention oil. I don't think he's going to talk about it. But like I mentioned here, one of the key factors with oil and what's happening is you're finally, if we look at the daily chart here, this is your 200 weekly moving average, this orange line down here. And this doesn't happen. Like you bounce off of it on the daily chart, as you can see, for the past like year and a half, nonstop, right? Well, something interesting happened. You had this OPEC meeting. We'll go into it in a second. You broke below, and now you're stuck below that level. I'm here to tell you this is kind of the craziest thing that I've seen, and it's really going to be more interesting over the next week after the OPEC report comes out on Monday or Tuesday that we see what happens from this point of view as well. If you continue to drop and reject off this, it will be very good for inflation data. I already believe into summer you're going to get great reports based on the movement of oil. That's my personal opinion. But if we go a little bit further and we look at what happened from this, okay? So from the OPEC meeting, it was really interesting. They increased the supply and how much they're pumping out from OPEC, even though demand wasn't that high. Like demand has been diminishing. And then Saudi did say that they can go back and that they can pause this or reverse it whenever they want. It's important to know Goldman did release a big statement saying that they expect oil, crude, Brent, etc. to all drop on this. And again, that's why you saw that massive drop there. You can go into Brent crude and look at there as well. I mean, obviously dropping looks much weaker as well. So there is no like bias here. This is just the facts. And we can look at that demand and we'll get a better viewpoint, like I said, when we get that report coming out here coming into Tuesday morning. So that will also be very, very important. But there's a lot kind of to digest here. And we also have to digest what's happening with the dollar, because the dollar and the yields have been a great overall viewpoint and something that I've been watching. Now, one thing that we did see on Friday from that non-farm payroll, and I do believe this could either be a trap or it's just misleading in general, okay? And we won't know until the Fed comes out. But the dollar got a nice big pump back into our key level around 105, 104.9. Okay. And again, you came down to our support. You broke below the 200 daily SMA. That was awesome. But then where things get more interesting is you go to yields, and yields are also doing the same thing, bouncing back into some of these key levels as well, bouncing on supports. So we want to see what the Fed says, and it's very important. I'm just trying to make more of these updates on this channel too, going broad market, just so people can kind of understand where I'm coming from and what's overall happening on the market and get a different viewpoint of this as well. Because when we look at what's happening with yields, it just paints a picture of there's a lot of confusion, that you're getting massive drops and major pumps. I mean, this is the bond market we're talking about, people. You're not supposed to move this volatile. So very interesting to see what's happening here. You can even look at TLT and the volatility that's happening with the 20-year treasury bonds as well, the ETF there. So pretty bizarre, pretty crazy. So things I'm watching right now. Now, going into this week, going into the rest of the month, right? The biggest things you're looking at are, one, inflation reports. Now, again, you want to see inflation reports reflect what's happening based on oil. You want to see inflation reports continue to moving into that 2% target direction. That's number one. Number two, employment. Because if you get a rise of unemployment and inflation even appears to be moving in the right direction, I believe the likelihood of a cut jumps tremendously. Even though we looked at what happened and, again, why DXY and the US 30-year yield rose was because of non-farm payrolls. And what happened based off of that is they dropped their expectations of a cut on this year. It dropped from like 60% to 50% in December, right? So, or by December that we get the cuts. So when we look at what's happening here, it's very, very important that we understand what to be looking for, not what we think we should be looking for. I know everyone, I get on Twitter and social media, everyone's like, hey, look, we need to be looking at the grocery bills. And I'm not saying that's not an issue. I want to make it really clear. Just because inflation is dropping right now doesn't mean we won't have issues down in 6-7 months because we handled this wrong. That's not what this means. But I want people to understand in the short term what you should and should not be looking at. You got to understand the bias and the non-biased standpoint. When people get upset, they'll say, Tyler, you're too young, you're this, you're that, whatever. I don't care. The fact of the matter is the same trend has happened over the past 2 or 3 years. Anytime we've gotten an upside on the market, it's come because X and Y. Anytime we've had a drop in the market, it's happened because of, the Z side of it, right? Of inflation stalling or dropping, or we reduce the chance of rate cuts or things along those lines, right? So it's very important. The constants are there. inflation reports, and ultimately what Powell says. The other Fed members have been all over the place. We need to listen to what Powell says because his voice has been very much so a constant if we go over every single meeting. And again, it's really important. Even when inflation stalled and everyone was getting really bearish between March and April, Powell was pretty bullish. If we remember, go back to those Fed meetings and really listen to what he said. He can say, I'm not worried. The market's resilient. The market's strong. The job market's great. This, that, this, that. He's finding the positives and everything. And maybe that's what he has to do, but understand how the market interprets that. The market interprets generally what Powell says and focuses on that. They don't focus on what, necessarily Bullard and the other guys are saying. It's very important to the head and then the body. There's a clear difference, right? There's a reason you have to cut off the head of the snake before you take care of the rest, right? That's typically how this works. Now, again, you can try to chip away. That's what I'm looking at right now. So broad markets, I'm pretty optimistic going into this Fed meeting. It's important to realize those CPI and PPI are this week. If those move in the right direction, I see clear skies ahead of us. I think this summer could be one of the summers to remember. Last year, they said sell in May and go away. And guess what? All those people missed out on massive, massive gains going into July. Again, we had a slowdown from July into September. But guess what? September is usually a slow month. We also have the elections coming in this year. Do you think there will not be a little bit of a manipulative force or a push on the market as well? We'll see what happens. I'm pretty optimistic. I like where we're at. More videos, more updates coming. Subscribe for more content. I appreciate it.